Hi, my name's John Fischer. I'm the Director of Investments for Socium Advisors. You can't go anywhere right now without hearing about AI. And there's a lot of excitement that comes with AI. How is it going to change things? How is it going to improve things? It's going to open up avenues to people and businesses that weren't available before. But at the same time, it also creates some fear about what this means for jobs and what it could mean and what it doesn't mean, and uncertainty. But that idea, that yin and yang of excitement and fear around new technology is not new. If you go back all the way back to Socrates actually once said that written word would be the downfall of society. So this idea of fear and excitement and worry is not new. If you go back to most recently 100 years ago with the invention of the automobile, there were dozens of automobile manufacturers creating automobiles. Fast forward 10 or 20 years, and there were three main providers that represented 80 to 90% of all automobile sales: Ford, Chrysler, and GM. So what does that tell us? Well, first of all, in terms of the automobile industry itself, there were only three winners of all those dozens of manufacturers. But what did the automobile do? It changed the way people live. It changed the way people travel. It changed the way businesses operate. So there were only three automobile companies that benefited in that industry, but it benefited all industries because it improved society with that technology. We've seen other instances of this. Look at the commercial flight, what commercial flight did for supply chains for businesses, for the ability to consume and buy products that are outside the US. So we saw that in the innovation of the 1970s with commercial flight. The same can be said for the internet in the early 2000s. There were a few big winners within that sector, but internet as a whole has changed the way that we live and operate. Amazon's a great example of a business that was created that could not have existed before the internet. So when you see these types of AI disruption, there will always be some disruption that causes friction in the economy and uncertainty about what this will mean. But broadly speaking, these types of technologies create massive value for many different companies and industries. One of the key questions that's come up recently with AI is these AI companies are spending a lot of money, what they call capital expenditures, and pumping a ton of money into their businesses, spending billions of dollars to try and be the winners of the AI race, right? To be the next Ford, Chrysler, and GM of all the different people and all the different groups competing in the AI space. The market has been a little bit nervous about, are they spending too much on their capital expenditures? The analogy I would use is a marathon runner in a race. If a marathon runner has too much hydration and too much nutrition, it will slow down their overall time. The flip side is if a marathon runner has too little hydration and too little nutrition, it will also slow down their time. So the challenge is to figure out the exact right amount, and we can only know that in hindsight. So right now, you're likely to continue to see markets try to figure out what's the right amount of capital expenditure for these AI companies and how much is too much, and with that will come volatility. So when we think about AI more broadly, it's likely to continue to provide and create a lot of excitement about the different opportunities, and also some worries about what it will mean for certain people, jobs, and things that we can't know. But when we look at past history, whether it's the automobile, airlines, or internet, we know that it's likely to create a few winners within the AI space that are hard to predict in advance. But more importantly, the technology advancements and efficiencies it will provide to so many companies and so many industries will be like a tide coming in that raises all boats.